I told Luke before I hit record, I'm dealing with a category 4 toddler storm here. So if you hear any shrieking in the background, nobody was hurt. No children were hurt in the recording of this podcast. Luke, it's really good to see you. Yeah, that's probably my best intro ever. Luke, but before we get started, it's been a couple years since we caught up, and I want to talk to you about investment and research and ideas and things like that. But I had two sort of more meta questions that I wanted to start with. And the first, this is just something that's been, it's been on my mind for like a year now. It's probably been on other people, smarter people's minds for years, and I'm sure it's on your mind too. And it's about, data is getting increasingly commoditized. And the rise of AI and using AI, and I'm using AI more and more on a daily basis. It's a really fine line between what is content, what is not content, what is creative, what's not creative. So as somebody who, for over a decade, like well over a decade, has been writing research, has been a content creator, that's what you do. I'm curious, tell me about how you're using AI, and do you have concerns or fears about AI? Do you see it mostly as a force multiplier for the research that you're already doing? This is a completely selfish question because I'm really wrestling with this right now, and I'm curious from somebody who's been, really in the selling research space longer than I have, like how is this affecting you positively or negatively or anythingly?
I'll start with a story. I was at a private conference out in Vail earlier this year, and one of the themes of the conference was AI. And actually, as we were out there, DeepSeek was launched, right? So that was sort of like a Sputnik moment for AI, where for Western U.S AI people are like, oh, this is going to be our next Google. We're all going to get rich, and then all of a sudden, over the span of 40 hours, like, oh God, open source free. So one of the themes of the there were a number of different VCs and analysts talking about it, and in between, in the spaces of one of the presentations, I remarked to one of the I think it was an AI VC. I said, "This is simultaneously both the most exciting and most horrifying thing I've ever seen in my 30 years in the investment business." Because some of the takeaways are, look, like we already have, you can use your phone, you take a picture of a spot on your skin, boom, AI far more accurately can read it cancerous or non-cancerous than a doctor. So like this is has the potential to do to wide swaths of white collar America what China did to wide swaths of blue collar America 20 years ago. And having been at sort of ground zero in in the Rust Belt of Ohio, like I've seen how that works out, and that is, I don't think sort of coastal America, Washington, New York, L.A., sort of these areas that were somewhat insulated from some of those from that dynamic. I don't think they know what they're in for on that front, possibly. As it relates to me specifically and how I'm using it, so that answer question, I do think it is a threat to what I do on some level, or what people do what I do. Uh I've been using Google as basically AI for 10 years, right? It's like I get a thought, I put it into Google, I pull a thread, I put in another, so it's basically been sort of, the Google search line has been my kind of chat GPT prompt for 10, 11 years. And so on some level, it is a force multiplier. It is it serves it up in a much cleaner way. With that said, it does sometimes serve it up in a false way. You'll read something and I'll be like, I know that's not true. So there's still glitches to it on that front, but you can see if you've used it a bit, it gets cleaner and cleaner and cleaner, faster and faster. And so I think it's gonna be very disruptive. I think particular to what I do, I've always sort of had a pretty big sort of like intuitive component to what I do, which is to say, a traditional economist will say, well, I'm going to study this for 6 months and I'm going to get all my data points and I'm going to aggregate my data. I'm going to come to my conclusion. I'm going to write my formula. I'm going to write the paper. I'm going to get it published, and then it's the truth. And like what I do is like, you know, perfect example, I wasn't doing FFTT yet, but in '07, I had a good friend of mine who I sat next to on the sales desk at Cleveland Research Company. And he's like, yeah, I just came back from lunch with a friend of mine that runs commercial lending at one of the biggest regional banks in the country. And he says his commercial loan book might be 35% overvalued. I'm like, dude, you realize that if their commercial loan book's 35% overvalued, like the bank is gone. The equity's worth zero. And oh, by the way, their loan book looks like every other regional bank in this country. They're all zeros. You realize that, right? He's like, I don't think that's right. I'm like, no, I know it's right. Like, it's not, like, I know that's right. Like, so we just need to figure out if he's telling you the truth. And he was. And so I heard that data point, and then we were seeing a data point from bad debt collection officers, and they were seeing the values. A bad charge. They buy charged off credit card debt, and it trades like an option, like with a time burn, right? So it's already been charged off once. They buy it for pennies on the dollar, and the hope was basically we can buy it for pennies on the dollar. We get someone to get a second on their house, and then we get 100 cents on we get par. And all of a sudden, the pricing of that market began collapsing, which was telling
Mhm.
that means the mortgage market's collapsing. The secondary home equity lines are collapsing. And then we're having a drink with someone at another regional bank one night. And again, this is Rust Belt, Ohio. They're like, "Oh yeah, Goldman called us today on the desk. They're like, they're no longer buying any secondary mortgage production from us. Window is closed." And so, like, with just those 3 data points, this was late September, early October of '07. S&P 500 is still all-time highs. Kramer's already had a meltdown on CNBC 2 months earlier, right? But I hear these things and I go, "Oh my god." And I literally went to 100% cash in my own portfolio. We started finding data points and putting this together for clients. I was telling my close relatives, like, listen, if you have more than $100,000 in a bank, get it under the FDIC limits. There are going to be widespread bank failures. And so, point is like this is the absolute antithesis of collect a whole bunch of data and process it for 6 months and then get it peer reviewed, and then a year from now publish it as research. I
Mhm.
think that business model, I think AI is going to kill it, and things related to that. So the more sort of intuitive you are around, like, and again, that's some of it's intuitive, some of it is just understanding very quickly which data, all data points aren't created equal, right? You know, and when you realize all data points aren't created equal, and you pair them and have an ability to sort of put them together in a unique manner, then you can kind of intuitively see around corners. And I think ultimately that is safer from AI than in any field, right? In the variety of different fields, right? If you're a doc who can sort of look at things from a nutritional standpoint and from a pharmaceutical standpoint and from a family stress standpoint, sort of holistically, and really know your patient, then I think those people will I don't think AI is gonna put them away. Or if you're, look at the thing and subscribe a drug, like, I think, prescribe a drug, like, there's gonna be a lot of disruption in fields, and docs are probably not the best guys to pick on because I think but I think the gigantic, gigantic administrative state that supports those docs is in serious trouble. So anyway, I am concerned. I think the more intuitive you are around your use and aggregation and application of data, the bigger a moat you'll have for some period of time. But it's a concern. I mean, and it's a real concern for sort of broader. I look at my kids. I got 3 kids. They're 24, 22, and 19. And like, as a father, like, I can see this thing coming for entry level jobs. It's a layup, and so it's already affecting the advice we've given our kids around going to school. Hey, like, look, if any of them could have gotten into Harvard or Yale, I would have certainly encouraged it. But like, if you're going to go to Harvard or Yale, you better, if you're going to go to that type of full ticket powered experience, um, you know, you better get a major where you're pretty sure you're not going to get disintermediated in 3 years. Uh,
Yeah.
especially if you're borrowing the money to do it, because you will literally have created yourself a debt. You'll have turned yourself into a debt slave, an indentured servant, at by age 20, 21, and it literally will have, crushed the first 20 years of your life. You'll be that debt will be a millstone around your neck. So, we've look, go to the best school you can get into. That's the cheapest. because I'm not sure it's going to, if AI does half of what they say it's going to do, I don't know that it's going to matter a whole lot. It's going to even the playing field between, the guy who goes to Harvard and the guy who goes to, Joe Blow Community College. It's going to come down to who you can compete, right? It's going to make everything like pro sports. You, they don't care where
I
you
guess
come
so.
from in the MLB, in the NFL. They don't. They could not care less if you played at Alabama or St. Mary's School of the Blind. If you can run a 4.340 and you can play and you can throw the ball, whatever, you are the MVP of the NFL.
Yeah, as long as you don't take a knee for the national anthem, but we don't have to go down that rabbit hole. Um, but no, I actually think you're shortchanging yourself when you say that it's intuition, and it's sort of like the thing that's disturbing me. But I also think it's maybe an opportunity, because like definitely there's not going to be lawyers anymore. Like I'll tell my daughters, do not go to law school. Like I'm not even sure
I
like
keep hearing that.
lawyers are
That's
going
one of
to.
them where they're like the low end law guys are like, holy cow. But go ahead.
Yeah, that's super clear. But I mean, in your example, you had three pieces of information, and you were able to draw the connection between them and build an analysis on the three pieces of information. But it seems to me that what AI is doing is there's so much slop out there. And when you think about the fact that like, in the next 12 months, more AI content will be generated than everything that's ever been produced probably in human history. I haven't fact checked that, right? But it feels
Some
like
versions,
that.
yeah, some
And you
versions.
just can't
Yeah.
and you can't find information anymore. So if you do have your tentacles in different places and you can say, oh, I have this data point and this data point and this data point, and I think there's connection or causality, or this will happen because of these things, and I know the information is true, I know AI is not like making it up, it almost seems to me like it makes that kind of knowledge work and information gathering even more valuable. This was already true to a certain extent with the internet, because we had so much information that it was no longer about, finding the secret nugget at the party with James Bond. It was about sorting through all the stuff on the internet. But now it's just all fake AI stuff. So it's almost like if you can do what you're talking about and you have some kind of platform to get to a requisite number of people so that you can get things in people's hand and say, no, I have the signal. The signal is here. Part of me hopes that maybe like AI is actually creating more value in that sense. And then it's also the force multiplier. Like when Iran-Israel popped off, I basically just took every single article I've written in my career about Iran and shoved it into an LLM and said, okay, like give me a 1,000-word Substack post for this, please. And it did. And it was good. And I was like, cool, I don't have to do that. So then I can do the thing that AI can't do, which is, okay, 3 scenarios for the next 2 weeks and how I'm going to protect clients and what this is going to mean, investment implications and supply chain, blah, blah, blah. And you give that to AI and it's like, word salad. But that's like the actual higher value work. So some part of me is like, you can tell I'm looking for the silver lining, like maybe information is going to be more valued and maybe it's a force multiplier and the other things, but I don't know, maybe it's going to get smarter and it's going to replace us all. But I don't know, I've been thinking about it a lot, and I was wondering if how you were thinking about it as well.
No, I think that's right. I mean, I think ultimately that's exactly it. Is there are, if you can separate sort of wheat from chaff well, and some of that is just experience, right? Some, everybody's intuitive on someone's experience. Some of it is just understanding human nature. I mean, some of it's being able to put yourself in other people's shoes. Like, I mean, I can't tell you how many times a week I think, well, I'm in their shoes. What would I do? And how many
Hmm.
times, like, that's the right answer. And and but a lot of times that's not the Wall Street consensus. Like, people are positioning for this and this is about to happen. Those are, and then just having that conviction to put it in front of the client base and the relationship with the clients where, look, I mean, it's a business where, if you're really, really good, you're gonna hit, you know, 55 to 60% of the time on stuff. You're gonna be wrong a lot. But if you're
Hmm.
right on more than you're wrong, and you're right on big things with conviction, right? It's a slugging percentage almost. And so if it can help you with your slugging percentage, and I think ultimately, I don't think you're ever going to get AI to give you a slugging percentage. I think you're going to get sort of, like you said, sort of, the guy willing to get hit by a pitch, get you to first, and then
Hmm.
is sort of to finish the baseball metaphor. So I think there's a lot of really interesting things around it. I think the disruption, I'd be a whole lot less concerned around it if the debt and fiscal situation was not where it is. Like deflationary impulses like this and a highly indebted, debt-based monetary system and banking system are fundamentally incompatible. And it just creates this For me, it's like a feeling of like the early scenes in Jaws, right? Where a girl's gotten chopped up and a kid's gotten eaten and you still haven't seen the shark, but something bad's out there in the water. And you don't know how it's gonna end. That's how it feels a little bit to me.
Yeah. All right. Well, we're going to back into all that. Before we do that, one other meta question to start us off. I mean, it feels like a crazy year. Has anything truly surprised you this year? Or could I put you on the spot and ask you, like, what is one thing that you just stopped and you were like, WTF? Like, I didn't even have that anywhere close to on my bingo card. Have you had any moments like that this year? Or have things unfolded a little bit as you thought? Because I think in the long run, I think a lot of the things you've been saying for years are playing out like relatively according to how you've said them. So I'm curious if anything has stopped you in 2025 where you were like, no clue. Like, I don't know how to integrate that into what I've been thinking.
Not really. Like I was sup I was surprised, but not surprised that the Trump administration, we've been saying, look, they need to, do their order of operations, and if they don't, they're going to have a crisis. And they didn't follow the order of operations, which was, look, you got to devalue the debt first, and then then after you do that, and run the economy hot, then you can sort of doge and term out debt, stuff like that. And they thought they could try to do, not do the order of operations. They got what we got in March and April, and they backed off. And to me now, their plan B looks sort of like our plan A. I've not really had anything where I was like totally WTF this year, but I've had sort of 2 WTFs that have kind of gotten us to, that are sort of on context for where we are today. The first one that
Hmm.
really surprised me was Russia invading Ukraine. I really didn't think they were gonna. It didn't seem like they needed to, and I think some of that was maybe, naivete on my part to some of the things that were happening over some period of time along the border there, that the Putin in particular felt was a much greater threat to Russian sovereignty, etc. Um, and I think the bigger WTF that I think we're maybe getting a bit of a denouement on with this European deal and the seemingly one-sidedness of it, if it is as advertised, is kind of the European reaction to that whole thing, which is just I really thought they had more chutzpah, for lack of a better word, than they did. Like, they just the weakness of Europe, the weakness and strategic incompetence of European senior leadership over the last 5 years, and the last 3 years in particular, has really, really surprised me. Like,
Huh.
and y someone summed it up. I retweeted it because I thought it was a perfect sum up, which is, like, the one thing they had with Russia was they had some energy sovereignty. And their sort of Russophobia gave that away. And, everything was based on Russophobia, and so now they don't have energy sovereignty, and now they're gonna pay a lot more for American LNG than they were ever paying for Russian gas, under this deal. And when you don't have even you had one guy on the planet who was willing to sell them their energy in their own currency, and they pushed him away. So now they've got no energy sovereignty, and they've got no military sovereignty. The Chinese are eating their lunch competitively. Like, that to me has been maybe the biggest surprise, is just how inept they've been strategically on energy, defense, geostrategy, etc.
Yeah, that's interesting. So we're recording July 28th. We'll get this out fairly fast. We won't sit on this episode for too long. And you're talking about this framework trade deal between the United States and Europe, which looks like, well, at least the first look at it, and we don't have the full agreement yet. Like, they're
No,
supposed to have, the actual text on August 1st. And one of the interesting things is that presumably, like, Trump will just pass it via executive order, which I'm pretty sure is illegal, whereas the Europeans will have to create some kind of legal process out of the statement and then have it ratified by a majority of states. But what we know is that it's going to be EU goods entering the U.S. subject to a 15% baseline tariff. It's going to cover about 70% of EU exports total. So it's a lot. And it's funny, I find myself taking the opposite point of view as you. I'm all with you that Europe has been extremely slow. And, you had COVID, you had joint issuance of debt, and then it faltered. And then you had Russia invaded Ukraine, and it was, okay, rah, rah, like rally around the flag, protect Ukraine, and then it kind of fizzled. And then you've got President Trump, and it was a week ago, you had Germany like leaking to the Wall Street Journal. All right, if you want a war, like let's have a war. I'm only lightly paraphrasing what the German officials said to the Wall Street Journal last week. And not like we're already capitulating and MERS is saying good things. But two other data points that have happened around the same time. If you look at both non-military and military aid to Ukraine in 22 through 24 versus 25, Europe has stepped up. Like most of the military and non-military aid in 2025 going to Ukraine is coming from Europe, is not coming from the United States. So it took 3 years. That's longer than like you would have wanted it to, but like the machine is starting to wake up. Or consider that on the same day that we're getting this EU-US deal, whatever the heck it is, and we can get into that, the German government just approved a draft budget, which includes a record investment of over 125 billion euros, and then another borrowing of almost 200 billion euros for infrastructure and defense and technology. So you're absolutely right that and especially Germany is the poster child of this, right? Like bet its security on the United States, bet its energy on Russia, bet its exports on China. Every one of those things have blown up in their face. So they're entirely screwed. But when their backs are up against the wall, are they just going to lay down and take it like a dog? Or should we be on the lookout for the Teutonic Knights marching through the forest and the gears of German industry starting to churn sort of in the background? So it's been slow and piecemeal. I'll be the first to say it. But to me, it sort of looks like Europe was like, okay, we can have 30% tariffs or 15% tariffs. Sure, we'll tell him that we're going to buy way more energy than we purchase in a year. And sure, we'll invest in the United States and we'll buy some weapons that we were going to buy anyway. By the way, they haven't figured out the tariffs on the important stuff like wine and whiskey. So when they've done that, we'll know they're actually taking things
That's when the riot will really
seriously.
start.
Exactly. And for me, the French cheese, God, will you just leave the cheese alone, for God's sakes? But I sort of look at it and it's they're just saying, okay, fine, take your apprentice tariff PR victory, Mr. Trump. And in the meantime, over the next 5 to 7 years, we'll work on fixing all of these wrong bets that we made. I don't know, maybe that's too rosy. I can make I was this close at the end of 23 to throwing in the towel on my bullish EU position and being these guys, if they can't do it on Russia, Ukraine, and on COVID, what the F are they going to do it on? But I just can't quit them quite yet.
Well, and to me, when you say it like that, I guess there was sort of one WTF moment for me this year as it relates to the U.S. that in particular, but this one happened this year. The prior WTF was more sort of context to this year, but that WTF moment was around Chinese rare earths and the vulnerability there, right? It's not like China weaponized rare earths against the Japanese 15 years ago. The whole world saw it. And then 2 years ago, the CEO of Raytheon was on record in the FT. Hey, we can't get away from China. Still nothing. And, we wrote about for clients at the time, the thing that, what two things that we said, look, China has more leverage than the US for a simple reason, which again, it's about weighting those data points appropriately, right? We were looking at Wall Street saying, and a Scott Bessent on April 7th saying, hey, we're the debtor country. We have all the leverage. Maybe in a year, maybe in 2 years, maybe in 3 years, that might be true. But the reality is you do what we thought they were going to do, and you're going to blow up the treasury market almost instantly. And sure enough, they did Liberation Day. Treasury market blew up in 7 trading days, 7, which was actually right around how long I think it would take. We wrote at the time, hey, watch this rare earth thing, because if we're China, that's the other thing we'll stop is we'll just cut off the rare earths. And I didn't know, but I suspected that it was a vulnerability. But the WTF moment, the one that I did have this year as it related to the US was how critically vulnerable to this stuff we still are. And I was hearing sort of sources and friends saying, oh yeah, no, you're not, it's not even the half of it. Oh my God, we cannot project conventional power for more than a couple of weeks without Chinese rare earths. Who's got the leverage? And then that was demonstrated, oh, by the way, in Israel. That might have been, I guess, as you now jog in my memory, that it is now coming out that the US ran through 15-20% of air defense missile stores in 12 days of medium intensity combat. Like,
Mhm.
holy cow. It is I knew the situation was not great and I knew it was a leverage point, but that to me was not just like, wow, I didn't realize it was that severe, but quite frankly, I was astonished at the I don't even know the right word. Uh, just strategic laziness or the I don't even as an American, it is astonishing to me how you I mean, it's not like we haven't been talking about China as a potential adversary for 15 years. It's not like the Chinese haven't weaponized this stuff. Nobody had the political guts to say, "Listen, I know it's I know it's not the way we do things with industrial policy. I know it's not clean to mine. I know it's not popular to be an engineer, but we need to fix this." Just like, where were the DoD guys on this? Where were the board of directors of the defense companies? Where was the panic? Like, it, that to me was a total WTF. Uh,
Yeah.
total WTF.
Well, yeah, I mean, they're singing a different tune now. I'm sure you see that DoD is now the biggest majority shareholder of MP Materials, so they're hustling. But it's going to take years. And to your point, like, I think this is something that a lot of people get wrong when they're thinking about U.S. China relations. Like, yes, in aggregate, if you're just thinking overall, like the U.S. has leverage, but asymmetrically, China has some very, very, very acute weaknesses that it can poke at if you really want to poke at them. And I think you're seeing this. Look at it. We don't even have to do rare earths. Think about NVIDIA getting the exception to send their AI chips to China. But okay, so what are we doing? Are we isolating China because the US wants to be at the front of AI, the shark in the waters that we were talking about? Or NVIDIA gets to export the chips so that NVIDIA can export the chips? It's like, and this is not singular to the Trump administration. The Biden administration, the left hand didn't know what the right hand was doing either. It's just to say that like nobody here has sort of gotten this right in general. And that when you're thinking about why countries like Japan or like others are looking towards China or telling the US, yeah, we're not going to listen to you when you ask us to be tough on China anymore, that's at least part of it. So it's why when I see a deal like this US EU deal, and it like doesn't have any real deliverables that like is actually going to come to the United States. It's just a press release. It's sort of like the one big beautiful bill. Like, okay, like they're not going to start cutting Medicaid till after the midterms, and all these things that are coming in, like not till after like Trump's second term. Like there's just a lot of polish around all this. But that sort of gets into what I wanted to back into this because we're dancing around it. So let's just go right into it. What do you think about, and I'm going to throw a bunch of stuff at you and you just take it whatever direction you want. What do you think about the one big beautiful bill? What do you think about the fact I've been surprised that inflation has not been boiling quite so, or really hasn't boiled as a result of Liberation Day? I think you're starting to see it in the data. Like maybe there was a bit of a lag because of inventories and other things, but like inflation has been relatively mild since Liberation Day. And I'm curious, like what your long-term horizon there. And also, I mentioned this on the podcast a couple weeks ago. I just rewatched Margin Call the other night, and the scene with Jeremy Irons, and he's listening for the music. And to sort of get, you were already sort of alluding to it with the echoes of the 2007, 2008 crisis. Like when you're listening, do you hear the music still playing? Because like U.S. debt is how many? I've even lost track now. Was it 3 trillion, 4 trillion they're adding to the deficit as a result of one big beautiful bill? Like, is the music stopped? Like, is the music just, is it a slow jazz? Are we doing elevator music? Are we still like, shout out to Ozzy Osbourne, rest in peace? Are we still doing Crazy Train? Like, take that very open-ended question, whatever direction you want, but really tell me about what you think about the fiscal and monetary health of the United States and what that means in conjunction with the policies that we're seeing.
Um, I think the one big beautiful bill is a nod first to sort of like and statements around it, right? When you hear Bessent and Lutnick and Trump say, "Hey, we're gonna grow GDP faster than rates on the debt," which is we're gonna financially repress bondholders. That's fine. That's the only way out of it. They should have done it from day one. I was a little surprised that they didn't from day one, but okay, whatever. In the grand scheme of things, shifting within call it 3 months, that's not bad, right? They've course corrected. I think the one big beautiful bill is ultimately a nod to that. We need to grow a bunch. Um, In a lot of ways, it is like you said, I actually wrote this to clients last week as it related to the Japanese deal, which is the US in the present day is really good at big, flashy narrative announcements and marketing and really bad at execution. And the Chinese are really bad at narrative, marketing, flashy announcements, and really good at execution. And when the rubber really meets the road, the execution tends to win over time. Uh, I think the one big beautiful bill is a nod toward trying to grow nominal GDP faster than debt. I think it's an admission that they can't cut anything that matters. One of the things we said with the whole Doge thing, we're like, this is stupid. When they talk about 2 trillion, then 1 trillion, then look what the United
Yeah.
States government is spending money on. You know, number one, 70% of all-time high receipts are going to entitlements. Another 25% are going to the gross interest expense. Another 8% are going to Veterans Affairs, right? So right off the top, that's 104% of all-time high receipts that are spent on interest and interest-like obligations. You're broke. Like, cutting is not an option first. Like, the first thing you have to do is basically restructure your debt, get a new deal with your lenders, and I think that might be what stablecoins is about, which you can
Yeah.
touch on, which is basically a soft form of yield curve control. But you gotta restructure your interest payments, term them out, cut the rate, whatever you gotta do, and then grow your business bigger so that your interest obligation is smaller, inflate, and then you can talk about doing things like Doge and stuff, right? So I think one big beautiful bill is a nod in that direction. I am that to the second point on inflation, I am somewhat surprised that it hasn't picked up more. Um, I am somewhat cynical that I think each administration from both sides of the aisle have been increasingly manipulating the numbers. I mean, even Larry Summers said, "Hey, if we calculated inflation as we did under Oken back in like 81 or 82, inflation would have peaked in 22 or 23 at 18%, not 8." So, yes, inflation is tame, and yet home prices are at all-time highs and rising
Yeah.
faster than they were from '03 to '05 when we had a housing bubble. We did to be clear, we had a housing bubble,
Right.
but but prices are rising faster today than in homes, with rates having gone from 2 and change to 7 on mortgages, and with no inflation. Stocks are at all-time highs. I can't think of anything I'm paying that I have to have in my life that I'm paying less for. Yeah, whether that be education, whether that be insurance, health ins like, there's very little that's declining in price. So, like, you know, I, eh, I've been surprised that the headline numbers haven't been higher. Maybe it's a lag issue. I certainly think it's gonna go higher for a simple reason, which goes back to the first point, which is what we call true interest expense, entitlements, interest, Veterans Affairs are over 100% of receipts. Like, that puts you in a print or default type of choice, and they are never going to cut any of those things. And so ultimately, they won't technically print. It'll be liquidity this or BTFP that or whatever. But there will be liquidity injections to sort of maintain and stabilize the treasury market, and that's inflationary ultimately over time. In terms of where are we on the music, um, I think to use the metaphor, I don't think the music's gonna stop. I think we're gonna go from a waltz, or maybe we already have, from a waltz to, well, maybe and I used to play the trombone, and it's I forget, right? But where maybe we're going 1, 2, 3, 1, 2, 3, 1, 2, right? And it's going 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3,
Yeah.
and pretty soon we're just gonna be at like a rock concert where it's just, we're in 1, 2 time because we're moving that fast. So, um, and what I mean by that is like, my friend Lynn Alden says all the time, nothing stops this train. Like, you look at the obligations where they are, we're at 105% of receipts on this, just the interest and interest like obligations. And receipts are highly sensitive on the margin to stock prices. So stock prices fall from just 20% and stay down for 6 months. Your receipts are going to fall through the consumer spending link. And then things get really interesting because you're going to get into a recessionary like environment where rates are rising in America. Now, I mean, people in emerging markets see that happen all the time. They would call that normal life. But Americans would, in a recessionary environment where rates go up, people's head would go, "Whoa, what's happening?" And we started to see glimpses of that in downturns regularly over the last 5 years, increasingly rapidly in downturns in the market, right? Even in March, we said to clients at that time, like, look, sure, you're going to get, if Besant really does take pain and stocks fall, yeah, you're going to get a brief decline in 10-year yields, but then they're going to start going up fast. And that's exactly what happened.
Ugh.
And a lot of traditional Wall Street guys are like, what's happening here? It's pretty simple. It's like the net international investment position of the U.S. is mandating, dictating that. So, uh, in terms of the music stopping, I don't. The music stopping for me is needs to be thought of in terms of nominal and in terms of real, right? Like the S&P's up this year in dollars, and it's down in gold, and it's down a lot in Bitcoin. And
Yep.
I think that's the new story. I mean, when you talk about a world where we're now moving towards industrial policy, which we clearly are, the NDAA 2026, you probably saw, has a funding for economic defense unit. And where basically they can do whatever the hell they want in the name of creating and maintaining economic competition and advantage as it relates to military affairs. Well, give me that in a blank check, and I will. I'll become the world's biggest venture capital fund in a big hurry. And I think that's what DoD,
Yeah.
like this MP materials. Like everyone's kind of like, oh, this is interesting. I think after they do another one or two, three of these deals, which I think they're going to do in short order,
Oh yeah.
and then they're going to probably cram down all the Chinese shareholders within it. Be like, hey, you used to own 5% of MP materials, China, which they do. You know, here's your check. Get the F out and go home. That's going to start like that's going to kind of start to illuminate the new rules. Like, I think the markets are starting to play by the new rules, which is long-term bonds are crap on a real basis. I mean, you're going to get paid every dime you rode, but you're just going to lose money every year relative to stocks, relative to inflation, relative to gold, relative to Bitcoin. I think stocks are going to go up most years because they need the tax receipts to cover the interest and the entitlements. And interest rates are going to be, I think, lowered regardless of what we're seeing. One way or another, they're going to get them lowered. I think that's what the pressure on the Fed's about. People are like, well, the economy's fine. Why are they pushing? I'm like, it's not about the economy. It's about the U.S. government's fiscal position. They are literally can't cover their interest and interest-like obligations out of receipts. They need more. They need more G. They need more growth, and they need somebody a very EM-like behavior. And I think we're going to continue to see gold and Bitcoin outperform stocks. So, it'll be stocks up in dollars, stocks down in Bitcoin and gold, and that's the music stopping this time. Is it's not stopping. It's going to speed up faster and faster and faster.
Yeah, or move to a different club, as it were. It's funny, the thing that should be declining in price in the United States is energy. But between the grid sucking and between exporting to the Europeans and everywhere else, like energy prices are not actually coming down for the average American. But I'm glad you said the thing about Bitcoin and gold. Like I've been coming around. I've been a long time skeptic on Bitcoin, and I have been coming around the last 8 or 10 months. I actually saw your post on X about, we've got a 1.4 billion market capitalization for fart coin, which is what you get when risk-free assets are underpinning a banking and currency system that are where we're at. Our Matt, who works with me at Bespoke, actually said, you should ask him if he wants to collaborate on a hard fork to create Shark coin. For those of you who are in crypto, like really, really in the weeds there. But so I have a couple different things because I want to go down the stablecoin route with you, and I also really want to go down the Bitcoin route with you. So which one do you want to do first? You want to go stablecoin first or Bitcoin first, or do you think we can't separate them?
Let's do stablecoin because I think it's yeah. Let's do stablecoins.
Okay. Well, I confess I don't really understand what's going on with stable coins. We did a podcast episode about it a few weeks ago, and so far it's like it's going over what's left of my hair. So why don't you tell me, like, if I'm struggling to understand stable coins, like we did a what are stable coins episode, but why is the United States pushing stable coins? Like, why is the White House saying this is the thing, this is what's going to solve this problem?
I think it is. I excuse me. I think it's the way they're going to get rates down near zero, whether the Fed plays ball or not. In other words, either Powell's going to cut rates to near zero because the United States fiscal picture needs him to cut rates to zero. Because let's face it, Ukraine didn't go, yeah, like we're losing or close to losing in a lot of really critical strategic areas. AI, grid, missiles, rare earths. We can't make missiles. We got outproduced
Ships.
4-1 by the Russians. We can't make shit. All this stuff, right? So, the AI competition that, for 30 years in my 30 years in this business, it has been our birthright to be dominant in tech. And for the first time in at least 30 years, we have someone that is credibly, I think we still have an advantage versus the Chinese in a lot of different tech things. But increasingly, we've never been in a competition where it's like, oh, our tech stuff, like it's starting to be, we can see clear to a spot where we're losing. I don't know that we're losing yet, but you can see clear to that. And so the US fiscal situation is already bad. We need to do industrial policy where we just like brute force this stuff. And Powell won't play ball because he's, dogmatically sticking with his mandate. But his mandate was for a unipolar world where, like, you know, we didn't care about what inflation was running during the Vietnam War. They beat the heck out of Arthur Burns, and he did what he had to do during the Cold War. And the 70s wasn't exactly going really well for the US in the Cold War. Right? And, the '60s either for that matter. And it wasn't like, "Well, hey, inflation's a little hot. We need to lose the Cold War if we have to, but we have to maintain the real value of bonds." And yet that very attitude is the prevailing attitude on Wall Street, which is like, "Oh god, the Chinese are catching up. We have to maintain the real value of bonds. The world ends if Powell cuts rates and gets politicized." Like, no, no. So I think stable coins are in essence, and I don't know exactly how they're gonna do this, but they're basically to anesthetize the long end of the bond market. In other words, like, we are going to, one way or another, get rates to 0, and if Powell won't do it, then I would expect to see, some sort of regulatory changes where Becton comes in or maybe Trump signs an executive order, and again, I don't even know if it's legal, it probably isn't, but who cares, right? I mean, like, that hasn't stopped us doing anything we wanna do for some time. Um And they're gonna say, "Look, listen, Mr. Big Bank, unless you start issuing more of these stable coins and then backing them with T-bills, you might fail your next stress test." And, this is like real Argentina-like stuff. But again, we're in an Argentina-like fiscal position. So, like, when you play Argentina games, you're gonna get Argentina prizes. Um, and then on the backside of this, and I hear credible rumblings, this conversation's already happening. Once the stablecoin market gets big enough, I because in theory, then that's sort of a windfall to the stablecoin issuer, right? So Goldman creates a bunch of stable coins, gets backstopped with T-bills, and now, like Tether is today, the stablecoin pays 0 to the stablecoin holder, and Goldman collects a 4.5% coupon in T-bills. I think what they're gonna do on the backside of that, again, some sort of regulatory forbearance, executive order, whatever, is we are creating a special class of American T-bills. They are not going to yield the current market rate of interest. They are going to yield 40 basis points. And in the same way, we have a special class of treasuries that go into Social Security, right? Like Social Security can't sell a Social Security treasury. They have to issue it back to the government, who then has to borrow the money, issue Social.
Uh-huh.
So I think what they'll end up doing is like, look, if you don't cut rates, Fed, we're just going to do this. And to be clear, Fed, they need the Fed to cut rates, not for the economy, not for employment, not for inflation, because the fiscal situation needs it. And the US is losing in some areas and close to losing in some others. And they need to brute force industrial policy like yesterday. And so I think that's
Yeah.
what they're doing. And so I find it fascinating. There's sort of this debate around like most of the debate around stablecoins I see is based on like the lens of the last 40 years. And the last 40 years are dead. Like that was a unipolar moment in history and it's over. It's over. And when you look at sort of what has happened to the real value of bonds when the US has been in outright war or in great power competition, like they've been crushed on a real basis. And so that's what I think stablecoins are for. And secondarily, like There was a great quote by Charles Gav. He was on Macro Voice in
Mm.
2018, and I've posted this once upon a time, maybe a couple times on my X feed. But he said, look, the Chinese are using gold as their reserve asset, basically using gold to gain the ability to buy marginal amounts of oil and other commodities in their own currency, and then they net settle it in gold. And so ultimately, we'll be able to tell who's winning and who's losing because if you look at the price of gold over the long-term treasury bond, and if the long-term treasury bond, which is a competing asset to gold, rises versus gold, then America is winning. And if gold rises versus long-term treasury bonds, then China's winning. And the Chinese system is winning. The gold as neutral reserve asset is
Yeah.
winning. And he said that in May of 2018. Gold has won by knockout. It has killed the long-term treasury bond. It's like not even close. It's up like 4x in 5 years, 7 years. So the Chinese stood up gold as their neutral reserve asset. The problem with gold, and I think the U.S. wants a neutral reserve asset. It's good for us, right? You go back to um, Ance's comment to Powell in 2023 about the resource curse of the dollar as it's been structured. Like the reason we are getting beat in these critical industries, the reason we don't have words is we make dollars. We have dollar Dutch disease. We make and export dollars, and everybody else makes everything else for us. And that's no longer working. Well, the fix to that is a neutral reserve asset. Gold could absolutely be the case. It would require a much bigger, higher price of gold. That would weaken the dollar. There would be some things we could do with revaluing gold and buying down debt. It would work. But the Chinese have stood up gold as sort of their neutral reserve asset, and it is won by knockout versus long-term treasuries as the world's reserve asset. You can see it at the central bank level. You can see it at price. You see it a number of different ways. The problem with gold is it really is a neutral reserve asset. The,
Yeah.
and I would say the problem with gold is like it's not a problem in my eyes, but in certain eyes in Washington is a problem. And the other issue, and I can see this one, is that we don't make as much gold as say China does or say the Russians do. There's some advantages they have there that we would be giving up by simply ceding that. And so in the and on the other side, if you use stable coins, there's obviously the connection to T-bills with stable coins that gold doesn't have. And whether you want to say it's a chicken and the egg, it's a chicken and egg debate around stablecoins and Bitcoin, and this is a perfect segue into Bitcoin. But basically, using the correlation between stablecoin market cap and Bitcoin market cap is very positive, and it varies in terms of multiplier. But when stablecoin market cap is going up, Bitcoin is going up, and vice versa. And so, ultimately, to my eyes, the stablecoin side creates demand for T-bills, and in so doing, sort of stands up Bitcoin as a competing neutral reserve asset to gold, right? So if gold is the BRICS currency and has knocked out treasury bonds, long-term treasury bonds, which it absolutely has, then we need a new reserve asset. What do we want to use? It's, I think stable coins with Bitcoin. And now you look at the chart of Bitcoin over gold over the long term, Bitcoin over gold long term Bitcoin has knocked out gold. Now, last 4 years, it's a draw with very high
Yeah.
volatility. But in the long run, Bitcoin is a harder currency than gold is. It has a higher stock to flow ratio over time. It's a firm cap. No matter what Bitcoin's price does, they're never making more than what's coded in, unlike gold. And so it would stand to reason that would drive gold over Bitcoin to rise over time, which would then drag along stable coins, which would then drag along T-bills in a way that gold rising would not. And I think it's being spun as maintaining the dominance of the dollar, which that's right. And it is also basically turning a loss into a win or something that works for us much better. Like we need to get away from the old dollar system because we can't make anything under that. And so,
Yeah.
it's sort of, the Solomon splitting the baby kind of, or cutting the Gordian knot of Triffin's dilemma. Uh, that's how I see stablecoins. I think most people are starting from the wrong direction with stablecoins of like, well, what value do they bring to the consumer? How are they good for the banks? Nobody gives a shit. That's not what this is about. It's the U.S. is broke. The U.S. interest expense is above its receipts. It needs to financially repress the heck out of bondholders. It needs to anesthetize the long end of the curve. It needs to reduce long-term issuance. It needs to move to the front end. and it needs a neutral reserve asset that's better than gold.
Yeah. Yeah. All right. Well, I want to talk to you for another hour, but we don't have another hour. So let's go into Bitcoin a bit, and then I'll close off with a question. I said I've been coming around on Bitcoin. Oh, and by the way, before we get there, I guess it makes sense that we have somebody so experienced with bankruptcy in the White House right now. It sounds like that might actually be something that's useful, and your explanation of stablecoins was very helpful for me, and also sort of crystallizes that. But as I get more constructive on Bitcoin, and my business partner Matt, who's been on the podcast, has told me before, everybody gets Bitcoin at the price they deserve. Well, the geopolitical analyst deserved it at about 108,000. So there you go, putting my flag right there. But as I start to get constructive on something, I start thinking about, okay, well, how could this go wrong? And so I'd like to ask you about Bitcoin, but I sort of see two long-term problems for Bitcoin. The first is technological, which is it quantum computing? Is it some kind of cryptographic advance that we haven't even thought of yet? It seems to me that there is the possibility of some latent threat that could make Bitcoin, that could undo Bitcoin. It probably doesn't happen in the next 5 years, probably doesn't happen in the next 15. But if you're advising somebody generationally, do you feel comfortable holding Bitcoin for 40 years and not looking at it anymore? Or like, is there something there? And then the other threat is sort of political and cultural. Like politically, like it's sort of careful what you wish for. Let's say we go down this whole rabbit hole and Bitcoin becomes exactly what you think about, but the U.S. government can't control Bitcoin no matter how like wonderful stable coins are and everything else. So do they get to a point where they start repressing the developers and the miners, or making it really hard in some ways to use Bitcoin or as a store of monetary value? Culturally, do people look at fart coin and Trump coin and all these other stupid coins and say, hey, the political class just figured this out and it's corrupt. Like they are saving themselves, as you talk about the deflationary spirals and AI. I can't find jobs, but they're charging how much for dinner with the president of the United States because he was in front on this coin that doesn't mean anything? And could you see like a cultural or political backlash to Bitcoin where it becomes, ironically, something that is associated with the elites, which is the most fascinating thing that's happened to me in the last 8 to 10 months. Like Bitcoin went from being, oh, the libertarian maverick sort of asset to the Trump White House being like, we are in the Bitcoin business, baby, and we're in it for the United States, but also for the Trump family, so come on in. So, you said Bitcoin was the harder currency. How do you think about those negatives? Is there one that I haven't thought of? And how do you, like, just take that any direction you want, because that's what I'm struggling with right now.
So the quantum thing is one of these things. That's been a concern. It's been around for a while. And it doesn't mean, it isn't valid. I think it is valid on some level. To be blunt, don't have the training to know. I'm reliant on people in that world that really, here's the issues to watch for. Ultimately, it would be a contest, right, between quantum sort of breaking, some of the, being able to sort of break the block, versus quantum being used to defend against
That
quantum.
too.
And that is above my pay grade in terms of the science or the technology of it. But I think it's a valid concern still. I think it gets less valid over time, but it's something encouragingly the Bitcoin developer community is worried about, which suggests to me that there's that they'll be on it if they need to be. Um, the the political side of it, I think is I think it's ultimately, yeah, I have a hard I'm kind of having a hard time kind of thinking about how.
It's a good question then. If you're hemming and hawing, that's good. I'm glad I'm not the only one.
It's interesting when I was at the Bitcoin conference in July of last year, and I spoke there, and I participated in a podcast, and somebody on that podcast had been the host had been at a party the night before, and said, we were with a very famous person whose father knows Trump very well, and Trump had orange pilled, so to speak, this person, and is telling him, well, Bitcoin's the new oil. And to me, at first I thought, okay, well, there's the proof of work, right? As an energy relationship. I just thought it was sort of Trump sort of simplistically summarizing. But then we had Paul Ryan write an op-ed in the journal saying we could use stable coins to, help manage the deficit. Then we had, which again, he was formerly in government, he was a conservative, whatever. Interesting, but not that. Then we had the Treasury Borrowing Advisory Committee, or TBAC. In October last year, in their quarterly report, they had a supplement around digital assets and how that can create demand for U.S. Treasury T-bills. That for me was like a whoa moment. Bringing up stable coins, talking about it being a $2 trillion market by the end of the decade. Then they brought it up again in another supplement in their January 2025 quarterly report. And it was then that it really hit me about what they mean by Trump, what I think Trump meant by Bitcoin's the new oil, which is when the US had a fiscal problem, they didn't have a debt problem, but they had a fiscal problem in 71, 73. And what they ultimately did was Kissinger went and attended a meeting and it was discussed where, listen, we're going to raise the price of oil 400%. There's a famous quote in the Shah of Iran. It was asked, like, why are you raising oil 400%? He's like, I don't know. Ask Henry Kissinger. And oil was made big enough to basically back U.S. deficits through the petrodollar deal. And that's what I think Trump means by Bitcoin's the new oil, which is this stablecoin initiative, I think, is really about making stable coins and by extension Bitcoin sort of the new oil, which is they're going to be made big enough to sterilize US deficits. And so from a political standpoint, I think that the Trump administration really wants they really want it. They really need it. They need something to sterilize deficits. And they want it in a way that is not gonna be inflationary, right? Like, the problem with using oil to sterilize deficits, of course, was that inflation went through the roof. And it creates real issues in terms of your industry, right? You jack up if the price of Bitcoin goes from 120,000 to 1.2 million, let's just say crazy number. Who suffers, right? What real economy process is broken down by Bitcoin at 1.2 million versus 120,000? It's not used for anything. Same thing can be said for gold, right? Ultimately, there's a few minor industrial applications, but if gold went from 3,400 to 34,000, so if oil goes from 65 to 650, bond market's going to crash, real economy's going to crash, inflation's going to go through the roof, bond market, right? If you use silver, you couldn't do it, but if you use soybeans and corn, if we try to balance our budget with, China on the back of soybeans and corn, soybeans and corn are going to be out $40 a bushel, probably more. And literally like 6 billion people in the world are going to starve to death in the next 4 months. But if you have to, when you want to rebalance things that are so imbalanced, you need a neutral reserve asset to inflate to the moon that isn't used for anything. And you can use gold, but if you use gold, there's no connection at all to the dollar. If you inflate the heck out of Bitcoin and it drags stable coins along, which are and then you just spin it as, hey, this is maintaining dollar dominance. And it's doing something we needed to do anyway, which was move to a neutral reserve asset because it will weaken the dollar, the price of the dollar. It will allow us to begin competing again and making stuff. But that's when I think about the politics of Bitcoin. I'm more focused on that. I agree with some of the, for lack of a better word, some of the shitcoin stuff, right? Like, I think, as a voter, I think um, I'll be diplomatic. I don't think it befits the gravitas of the office, for him to be issuing, shit coins. I don't see how that makes a ton of sense. But Bitcoin, I think, is in the national interest of our country, as a neutral reserve asset that will then allow the dollar. It will do two things. It'll weaken the dollar against the yuan. It'll strengthen the yuan against the dollar. It starts to incent us to be able to industrialize having a neutral reserve asset, be that gold or the Bitcoin, and it stopped the Chinese from being able to be mercantile.
All right. Well, I've already taken you longer than I should, so we're going to close out. This is a new segment, and you're my guinea pig on this. So, and you'll have to come back on because I have like 5 million other things to talk about with you with that. But I'm going to digest it and ask. Okay, so you have $1 million and a 20-year time horizon. You can pick one thing to invest in. What are you investing in? And by the way, while all this has been going on, folks, my daughter decided to fight her nap. It's usually noon. She fell asleep about 10 minutes ago. So as I've been talking to Luke and looking at his face, I've also got the monitor here watching to make sure that she's not launching herself out of her little floor bed. So she's fine. She's asleep. I'm good. That $1 million 20 years from now for my daughter who finally went to sleep. One asset. What are you picking?
Translation: Luke, put your daughter to sleep.
Hey, it's good. I get plenty of people tell me they listen to this podcast just to fall asleep, and I consider it a compliment. Don't worry.
One asset alone, and I don't have to
One
touch it for
thing.
20 years. I probably actually do put it in Bitcoin. But I would, practically speaking, I would put it in probably half Bitcoin, half gold, because I'm not getting any younger, and who knows, Bitcoin's volatile. But if I only had one, yeah, it's probably what I would do based on what I'm seeing out of how I think the U.S. government's using this asset.
Okay. Yeah, it's funny. At the beginning of all my presentations, every month I've been updating a chart that shows year-to-date performance of Bitcoin, gold, S&P 500, Treasury yields, U.S. dollar, and it's funny. Until about 2-3 months ago, like year-to-date, gold was the pretty girl at the dance, and now the last month or two, it's been Bitcoin. And the silence that goes across a room when that chart goes up, and people process like, oh, I thought I was doing good this year, but I'm not doing good this year at all. It's a deafening silence to the metaphor about the music stopping. All right, Luke, I've kept you over. Thank you so much for coming on, and we hope we'll have you again soon.
Of course. Thanks for having me out. It was great catching up.